Welcome to the Lend Academy podcast, session number 7. Okay, so today on the podcast, we are going to do something a little bit different. If you've been following along on the blog this week, then you will know it is the launch week for Lend Academy Investments, which is our shiny new investment management firm. And that is an operation that is run by myself and 2 other gentlemen by the names of Bo Brustkern and Jason Jones. So today on the podcast, I decided to bring these 2 guys on, have a chat. But before you get any ideas, this is not a promotional podcast by any means. In fact, we don't even talk about the offerings of Lend Academy Investments. It's really just a get to know you sort of podcast with a focus, as always, on education. We want to teach a few things, provide some ideas. We talk about some of the background of these guys and how they really got involved with peer-to-peer lending, and then about the future of this industry and where we all think it's going. I found it a fascinating podcast. I hope you do too. Okay, well, welcome to the podcast, Bo and Jason.
Thank you.
Hi, Peter.
Hey, so let's just start off with getting a bit of background. I mean, Lend Academy readers don't really know you guys at all. So why don't we just start with you, Bo, and just give us a little background about yourself and your work experience and that sort of thing.
Sure. So again, my name is Bo Brustkern, and I have been in finance my entire career, primarily on the buy side. Right out of college, I worked for a real estate investment trust called Wellsford. And then I moved over to a private equity firm in Denver, Colorado called Base Industries. And after that, made my way into venture capital in the early 2000s to mid 2000s and worked for a firm. I was an investor at Rustic Canyon Partners in California. And then in the mid 2000s, I moved back to Colorado, back to Denver, and I started building my own company, which was itself a financial services firm. Although a departure from the buy side, I was now a service provider. And I founded a firm called Arkstone Partners, which is a complex securities valuation firm. And that company is now 7 years old and is a nationally well-respected valuation firm. It's basic that entity, Arkstone, is basically run by a 3-person directorship, and the team has just been doing beautifully. So it's given me a lot of time to look at new investment opportunities, and I've become essentially a passive owner and coach to the team at Arkstone. So in the last 2 or 3 years, as I've transitioned away from being an active owner or an active participant to more of a passive participant in Arkstone, Jason and I have been working together a lot, quite a bit on the buy side and on the investment side, and finding new investment opportunities.
Okay, great. So what about you, Jason? Let's give what's the Jason Jones history?
Thanks. Okay, so I guess when I look at my career, I think of myself as an entrepreneur. And also as an investor, but probably an entrepreneur first. And over the past 18 years or so, I've been kind of investing in technology companies, and I've worked at a number of different firms to kind of build my foundation. And that started at Fidelity, went to work at Cambridge Associates, then went to Goldman, and then worked at J. Goldman and Company. All of those were kind of, I was an internet research analyst for the most part, portfolio manager, research analyst, buying kind of internet stocks for the most part. In 2006, I launched High Step Capital, which was my own firm, an investment and consulting firm focused again on kind of investing in the tech sector, specifically kind of the consumer internet space is my strength. That was an interesting experience. And through that, I ended up launching a number of different investment firms. I've done 6 so far.
Wow.
And my latest one is Lend Academy Investments. This is my second P2P fund. Bo and I had launched a previous one with High Step back in the day. And then, Peter, you and I met when we decided to create a conference together, the Lend It Conference.
Mm-hmm.
And to me, the Lend It Conference was all about the idea of kind of figuring out what was out there in the world in the P2P area. We knew Lending Club, we knew Prosper, and we knew that there was a bunch of others that were coming, that were emerging, and we just wanted to get them all in one room and learn what was out there. So
So let's go back though to your a couple of years to when you first discovered peer-to-peer lending and how you came to know it and how you came to really be passionate about it.
Are you pitching that to me?
Either one is fine.
Okay. Well, we both have it. I mean, maybe we'll pass it back and forth between each other because this is where I first started working with Jason. We were looking for really the ideal investment opportunity, and my focus as a complex securities valuation expert was on finding assets that were, number one, hard to access, hard to find, and number two, hard to value, which if taken together make for really interesting investment opportunity if we can access those assets and value them appropriately. And Jason and I came together to do work in the private company marketplace, which is best known for some of the entities that like SharesPost and Second Market that we're trading in the big private companies pre-IPO. So we helped private clients value Facebook and Twitter and other shares when they were still private companies. And our work in the private company markets exposed us to an up-and-coming company called Lending Club. And this was several years ago. And this is probably a good point for me to pitch it over to Jason so he can tell that part of the story.
Okay. So, like I said, we come at this from an investing perspective, specifically a consumer internet perspective. And with Lending Club, we were offered shares in Lending Club, pre-IPO shares, way back 3.5 years ago. And it was our first chance to kind of look at that company and also the space. We love marketplaces, whether it's eBay and Craigslist or, moving into financial services. We'd studied Second Market and SharesPost quite a bit, and just kind of how it's an online marketplace that brings together buyers and sellers in their particular category. And we were looking at the other kind of financial services marketplaces that were out there. We looked at crowdfunding, we looked at Indiegogo and Kickstarter on the crowdfunding side, and then we looked at Lending Club and Prosper. And we were really coming at it from a top-down perspective, knowing that we really thought that the marketplace model was a great model in financial services, but what we didn't know was consumer credit. So we spent about a month and a half analyzing Lending Club and loved the business model, but didn't know consumer credit, and brought in some old friends from Goldman to help me analyze help us analyze the consumer credit part, and they didn't have a high opinion of it at the time.
Oh boy.
I didn't know anything about consumer credit at the time, and I listened to my smart friends at the big bank who told me that this can't work. Installment loans aren't a big business, and it'll never scale, and it's consumer credit, it's unsecured, all these different kind of negatives around the concept. And I walked away from it. We didn't end up investing.
And so when was that? What was the time frame? You said 3.5 years ago?
About 3.5 years ago. Yeah.
So 2010.
It was, the valuation on those shares was less than $100 million. So it would have been a home run investment if you had invested.
Yeah. You could have retired on that one deal.
Yeah, exactly. So we missed, but that was our introduction to P2P lending, and watched the space for about another year. And basically we learned what we didn't know, which was the consumer credit side. Spent a lot of time just researching it and just talking to anybody we could. And when Lending Club passed back through town about 2.5 years ago, we met with Renault and their institutional salesperson. And at that time, there were no official funds on the platform. And Eaglewood was the first fund that was actually being developed. And we talked a lot about how Eaglewood was creating this fund on their platform, and I was intrigued by the idea. And I still had a good relationship with Lending Club, and we hatched this idea that that Bo and I should create a fund as well. And at this point, we had spent enough time researching the industry that we felt much more comfortable about it, and that's exactly what we did. We reached an agreement with Renault and with Lending Club, and through High Step, we formed we built a P2P fund, institutional focused P2P fund. That went extremely well, and that was our launch into the P2P space.
Okay. So you learned fairly quickly then that the guys at Goldman were wrong in their judgment of Lending Club and the whole space.
Yeah, you just I guess I learned that if one company is being disrupted by another, you don't ask the company that's being disrupted about the company that's the disruptor.
Very true. Very true. Yeah. Very true. Okay, then let's just talk personally then. Why is peer-to-peer lending exciting for you guys? I mean, I'm very passionate about it, and I've shared that many, many times, but I'm curious to get both of your takes on why devote your career to this asset class now.
In a word, it's yield. This is a really, really exciting asset class for a whole number of reasons, but it all boils down to a return to yield for people like my mother-in-law, right? People like my brother or my friends and family. I love the idea that this is accessible yield for people who can't get it, and that just makes me so excited. We talk about it in lots of different ways, and some of the phrases that I like to speak to are, yield for the middle class, or for the. I don't love that term, but it's not for the institutions. This is a marketplace that was built around real people and providing benefits on both sides. And I think that story is what really, really speaks to me. Mm-hmm. And let me tell you, or tell the audience a little story about we've been talking about putting together like a tagline of sorts, or a rallying cry for Lend Academy investments. Mm-hmm. And one of the early ones that I just totally fell in love with was real returns for real people. And we ended up killing that as a tagline, but it still speaks to me a lot, because our job as portfolio managers and as investors is to go find these genuinely attractive returns and provide them to people that can't access them. So it goes back to that original desire I had of finding those hard to access assets, hard to value assets, and introducing that as an investment opportunity. And unlike the other things I've done in the past, 15, 20 years of my career, this is doing it on behalf of investors that are a part of the real world. Now, we killed that real returns for real people in favor of real returns by investing in real people,
which is close.
Which is the other half of the equation, isn't that?
Exactly.
I mean, it's also very exciting, right?
Yeah.
I love that one. I love that one too, and that's what gets me so excited about this space and for building a company here, is that we have both sides of the equation, that we're providing a real value to our investors, and we're providing a real value to those people that are accessing this capital.
Right, and we should point out too that peer-to-peer lending, its name is all about individuals investing in other individuals. The whole concept started that way. It wasn't until the asset class was really getting traction before the professional investors, institutional investors came on board. So it's been from day one, I think, a story about real people, and about, that they're the ones that took the punt on this new form of investing. And I'm excited too about the fact that we're moving back towards that story again. So what about you, Jason? What's your why of why you love, peer-to-peer lending?
So, for Bo and I, this is our second time around. This is our second fund, and that means a lot to me. I would say the first time around, when we first did this, it was a very analytical approach. We found the space to be the consumer credit space. Obviously, $850 billion in consumer credit card receivables outstanding. It's a huge marketplace. The yields were high. The asset class is uncorrelated to other marketplaces. There's a lot of the duration is really short. So there's a lot of really interesting kind of analytical kind of characteristics of P2P lending, and I think that's what originally caught us, along with the fact that it was an online marketplace that kind of opened up an asset class to the world when it was formerly just dominated by banks. So those are the things that kind of attracted us the first go around, and we built a company that was focused on yield, and it was a great strategy. I would say the second go around, though, is, it's our second time around. We know how to do it now, and this time it's much more nuanced. We, instead of just being about the numbers, we know we have much more soul this time. We know what is important for us, to the industry, and that is humanizing it, making it an actual connection between an investor and a borrower. Really focusing, like Bo and you have both said, really focusing on making that connection happen. The essence of peer-to-peer is what we're talking about here. And what we've seen over the past few years, and we were part of this, is that the pendulum swung way to the side of the institutional market, where there's just big Wall Street firms coming in and stripping out the essence of P2P lending and really focusing on yield, which is great. I mean, it worked. I would say it's been beneficial for the industry. The industry has grown rapidly as a result. But now it's time to bring the pendulum back, and that's what we hope to do with Lend Academy Investments. Mm-hmm. Bring that pendulum back and refocus on the individual investors who have been crowded out to some extent by the big Wall Street firms. And we think that our approach to the market will be really focused on helping any individual player invest alongside the big Wall Street firms with the same type of credit modeling, trade execution, and general thoughtfulness that a big Wall Street firm would bring to the table.
Mm-hmm. Mm-hmm. Sure. Now that, and I think we've seen it from both platforms really in the last 2 to 3 months. Both platforms have made moves in favor of the retail investor. They both of them know there's plenty of institutional money. I wouldn't say it's easy money, but there's certainly a massive demand on the institutional investor side. And I think both platforms got a little bit out of balance, and now you've seen both Lending Club and Prosper have made real concrete moves in the last 2 to 3 months that are in favor of retail investors. And I think that speaks to, I think the importance of the individual investor. So yeah, I totally agree there. So let's just go back. You mentioned the Lended conference. Wanted to just touch on that a little bit, because that's really where we all met for the first time. We all worked on the original Lended conference along with several others people, obviously, but that was where I felt like I had a blast doing the Lended conference with both you guys, and then I just want to talk about the origins of our partnership now. And because I remember I just going back over the summer and I got a phone call from Jason saying, hey, we really liked working on the conference. Let's go do something else together. And so why don't you just talk a little bit about that, about the origins and the mindset. I wanted to start off with you, Jason, about moving into this new kind of deal with the three of us. Sure.
So I have been speaking at Dara Albright's conferences for a while now, just on kind of tech investing, kind of internet investing, venture investing, those types of topics. She's held conferences about the transformational aspects of Wall Street, and she was really at the leading edge of kind of the whole crowdfunding move, the P2P lending move, and just the changes happening on Wall Street. And I was lucky enough to have presented at her conferences a number of times. And then back in December 2012, I presented at one of her conferences in New York City. And after the conference, I went up to her and I said, Dara, I've been working on this P2P lending fund, and I think that there's something here. I think that it deserves a conference. I see so many companies out there in the world that look really interesting globally. This is a global phenomenon, and wouldn't it be great if I could get your help and we could put a conference on together? And that planted the seed, and we both. She immediately said that was a great idea, and we both kind of thought about it, stepped back and thought about it for a second, and we said, we need the guy who is the media voice in the industry, the guy who is the go-to person that everybody reads in P2P lending. He'd be a perfect addition to our founding team to create the conference. And that was, of course, Peter. We reached out to Peter, and Peter said, that was something that neither of us knew Peter at the time, so we introduced ourselves. And Peter, I guess you were thinking of doing that, correct? You were thinking already thinking. Yeah, it was actually on my goals for 2013, and I'd actually had a number of readers suggest to me that we love
chatting online, but let's actually get together and have a conference and do, so and really where we can all meet and compare notes and learn. So yeah, it was I was very receptive from the get go.
Yeah. So that was that was just January 2013, and from January to June, we spent pretty much every day on the phone together planning the Lendit conference, the Lendit 2013 conference. Mm-hmm. And I just had such a wonderful experience working with you guys. Bo was also very helpful in planning the conference, and we just had a great time. It was a great kind of period to get to know both I already knew Dara, but to really get to know you, Peter, on mm-hmm. a working relationship. And we just had such a wonderful work experience. We put on a great conference, and it just felt like the working dynamics with you were really great. So after the conference, when Bo and I kind of decided to do something else, we thought about you. We knew that kind of where your mindset was, and thought that Lend Academy had such a great brand in the marketplace. We felt like there was this need to provide investment services for individual investors, both accredited and non-accredited, but just individuals who wanted to compete with the big Wall Street firms. And we couldn't think of anybody better than you to approach to create this new model. So after the Lendit conference, called you up and said, Peter, there's great work on the Lendit conference. What do you think about doing a business together? And that was the genesis of our partnership.
All right. Do you have anything to add to that, Bo?
Yeah, sure. I mean, the keys, as I think we've all learned in our careers as entrepreneurs, and we talk about this often as a team, is if we're going to build a long-standing firm that has a dynamic culture, can grow and move with a dynamic industry, and can attract amazing people to it, fundamentally the thing that's going to matter most as we build our firm is our shared value system and the culture that we create. And part of what Jason is talking about here when he says we had such an amazing time building a Lendit conference together is I think the three of us were mutually attracted to the two very fundamental things about you, Peter, and that what you've done with the Lend Academy blog since day one, and that is providing transparency to your readers and having a service mindset and leading with education. And I think we all felt very strongly about that. And that's what made Lendit so successful, or it's at least a part of it. And so that is the fundamental, I think, that brings us all together and will allow us to build a long-term sustainable firm.
Okay. Yeah, I obviously I agree completely. And I want to switch gears here and talk about the industry itself. And, we've obviously, everyone knows it's growing so rapidly. We're still really got, two major players in the consumer lending space here. The small business lending space is really starting to expand. But what I'd like to get from both you guys is just a little bit of a vision for where you think it's going. I mean, where are we going over the next 12 months, over the next 24, 36, even longer? What will this industry look like in 5 years' time? What do you think, Jason?
I guess on a question like that, I immediately think of a traditional bank and the services and products that they produce. And then I think about how technology and software are unbundling a traditional bank. And all the different services and pieces of the services are being split up into tiny pieces that different individual firms take on and really perfect. Mm-hmm. And that's what's happening right now in the space. When we created our first fund, we felt like we had to build a complete credit team in-house, build our own trading software, and have kind of a full vertical stack solution in order to produce something that mimics a bank. That's not the case these days. Now when you look out in the landscape, you see the marketplace just fractionalize. And you're definitely going to see that at the Lendit conference this year. But there are multiple trade execution platforms that specialize in trading. There are teams of credit modeling experts that are experts on specific platforms or specific categories or specific niche segments. There are obviously different platforms that focus on different categories. We're talking kind of consumer credit, but then even within consumer credit, we have emerging prime, we have thin file, we have kind of traditional consumer credit. We've got auto, we've got mortgages, we've got hard lending, we've got it just goes on, and it's global. So I love the unbundling aspect, and I love being able to build a business in the middle of that kind of the fractionalization that's happening out there, pulling the pieces together that you need, putting them together, and producing an investment model that's probably superior because you have small experts working in different pieces. So you pull them together, and the final product is probably superior to anything you could build in-house.
Right. So you're talking about like there's going to be really a specialization of all the different components here. And as we're already seeing that, and I feel like, that's something that as the industry gets bigger, it's going to provide even more opportunity for even greater specialization, I imagine.
Yeah.
Yeah. So what do you think, Bo? Where do you see this industry moving?
I think the most interesting or exciting part about this industry is dynamic risk pricing. And I think we're heading toward that. And
well, can you explain that real quick?
Yeah, absolutely. So right now, essentially what Lending Club and Prosper and other platforms have done is to create reduced risk pricing for consumers. In other words, looking at individuals in new ways and pricing loans lower than what those consumers are finding at traditional banks or credit card companies or whatnot, and providing a very streamlined, efficient system to obtain capital in an installment loan format. And I think that's a wonderful service. I think that we are just at the very, very tip of the iceberg here in terms of innovation. These companies are well on their way to building out new services, I believe, that will allow for more dynamic pricing so that as consumers better themselves, their cost of capital reduces. It's a little bit like what we found building the companies that we have. When I founded my first company and I went to go get capital for that company, there was only one source and outside of friends and family, and it was extremely expensive. But 7 or 8 years into the company, and I can get a loan that's very attractive, has great rates, and allows me to operate the company very capital efficiently. And it's so it goes with consumers, so it should go with consumers, but that those mechanisms are really not in place, and those innovators have been stifled by what amounts to giant institutions that are extracting high rates from consumers that really deserve better. And so we can see, in the end, we can see consumers getting great advantages from this marketplace by watching their cost of capital reduce, and of course it's going to fluctuate. Sometimes it will increase due to changes in circumstances, but that's just a really efficient market, and that's going to be fantastic, and it's going to draw a lot of capital into this marketplace, and therefore be a very interesting place to be investing.
Yeah, I love that idea, and I think that we've got this industry, this banking industry, which when you think about it objectively, it's kind of strange that we had the disruption of the music industry really started in like 99 with Napster, and it really, the music industry now looks nothing like it did 15 years ago. And the newspaper industry and the travel industry, these industries have been disrupted forever, and they look nothing like they did. Banking, pretty much the same, really, as it was 15 years ago, with a few little minor changes here and there. And so this is why I get so excited, because I feel like banking is a massive industry. You walk downtown at any major city in this country, and the big buildings are they're banks. The banks have their names on these big buildings, and so it's a massive industry that has not been disrupted yet. And I feel like if we look 15 years that the travel industry or the music industry, and go out 15 years, and this is where I believe that the financial services is going to look so incredibly different in 15 years' time than what it does today. And on that note too, I just wanted to, we're running out of time, but I wanted to get brief thoughts from both of you about what role that you see Lend Academy Investments playing in this future as this disruption happens more and more, and as we feel, that there's opportunities for, for more specialization and the whole of this online lending industry starts to blossom. What's Lend Academy Investments' role? Someone talk to me.
Oh, okay, I'll go.
Fire away, Jason.
I'll try to. I sometimes I get a little carried away with vision, but I'll try and do my best here.
Okay.
When I look out 10 years down the road, whatever it may be, I see a world where people all around the world are connected to one another and can financially benefit from one another and financially help one another. When I look, 30 years down the road and we look back to today, most people think that social networks are kind of the big theme that's really transformational in the world. But I see it as the start of something bigger than that, which is the emerging middle class globally. And we're seeing this in so many different places. And that emerging middle class is going to be connected through social networks, but they're also going to financially benefit. They'll have financial contracts with one another through P2P lending and crowdfunding and some other areas. And I see that as incredibly powerful and could be kind of revolutionary. Individuals helping providing capital to other individuals on a one-to-one basis or as part of a crowd. That's really fascinating. I could see a time when somebody in South Korea could invest in a small business in Germany, or somebody in the U.S. invest in a small business in Brazil, or there could be affinity groups, people all over the world that like one specific topic and find either people or companies in that specific affinity group and lend to those. I just love the idea that of combining kind of the social networking aspect with the individualized lending aspect. So long term, I think it's a huge opportunity, global, and it's going to completely change the way we think of banking today.
Mm-hmm. And you're saying that Lend Academy's investments role is specifically connecting those people. Yep. What is that? What you're saying?
I think Lend Academy is known for educating investors, and I think that's what we lead with. We continue to do our best to educate people on what's out there, their investment options that are out there, and then we play a role in trying to connect those people one to another, kind of all over the world. Okay,
Bo. In a couple of minutes, what are your closing thoughts?
You bet. I think Jason nailed it, and we're all aligned here. We do three things at Lend Academy, and I think those three things will be important to us well into the future, and I think they will be important for the industry, and that is truly exciting. The first thing is we provide transparency, and we educate the world about peer-to-peer investing. The second thing we do is provide ways for people to interact, and we connect people within the industry. And the third thing is that we provide ways for individuals to invest in this industry and through this new medium. And that's it. It's plain and simple. We educate, we connect, and we invest.
Okay, that's a great place to end, Bo. I appreciate that. So, thanks a lot, guys. Appreciate you coming on, and I know that let's do this again sometime so the Lend Academy readers can get to know you guys a bit better.
Great, thank you, Peter.
Okay,
thanks, guys.
Okay, thanks. Bye.
Bye.
Okay, so there you have it. I hope you get a sense now of why I'm just so excited about this new business, about the space in general. I've had a blast working with both Bo and Jason. It's been a real privilege, and look forward to a long partnership together with those guys. And as I said, you will be hearing from them on at least a semi-regular basis here. So on that note, I appreciate you listening, and we'll catch you next time.